Morning, everyone. This is exciting. I see a lot of folks coming in. Just quick, my name is Maureen Reyes. I'm the Vice President of Business Development. I've been close to 20 years in property management, done a lot of roles, very excited. And today I serve and my main responsibility is VP of Business Development for ACAM. Really quick, ACAM has been in business since more than 40 years, 1983 to be precise. And we serve three counties, Palm Beach, Broward, and Miami. Any questions? We love educating our managers, our board members. We've done several with you, Jeff, and the team. So very excited and thank you very much. Any questions related to operations, excellence? If you need any help, I'm here to serve you. And I have with me Eric and Jeff. You could go ahead.
Well, thank you, Maureen. Before we go, because the numbers are still rising pretty quickly here. Uh, you mentioned your service areas, but let's say somebody, because we have a statewide audience today. So let's say there's somebody in Allen's neck of the woods up in Central Florida. They want a second, if they have a management company, they're happy with their management company, but maybe they want a second arm, somebody to help that they can pay a little bit to get second opinions on maybe how you've done something versus how they're doing it. Can you also provide consulting services statewide?
So absolutely. Again, I have us as an added resource. Eric and I have been in the business, 20, and Eric, I'll let you speak on your end. But yes, absolutely, we can obviously help. Um, Logically, eventually we will be statewide, but now we are just dedicated to the three counties. But yes, Jeff, you could absolutely give us our emails, my phone number. We are here for you.
I'm the director of client relations for ACAM. So, like Maureen, I have been in this business for longer than I've not had hair. So, I won't say that I've lost it all because of everything that goes on in property management. It's a business that we love. Maureen and I really take the focus here at ACAM on educating board members, right? So, this is not
Right,
just specifically for ACAM clients or KBR clients, right? This is
right.
really, we want all of you to get this information so that you can bring this back to your boards and effectively manage. And that's just a benefit to your community. So if there's any questions, right? Maureen and I, Jeff, Alan, we're all resources here to help everyone. We just want to make sure that you guys have the understanding and the knowledge to bring back. So whether you're clients or not, you're friends. So, and Jeff, I was seeing too that there's we're getting a little bit of echo, some
Um,
feedback.
I have an answer for that. Yeah, I saw that too. And for Kareen and a few others, I noticed that you're on here twice. You might be using a computer and a phone, one to view, one to listen. So you may have one too close to the other. So things of that sort. If you have a device that's too close to your speaker or to your microphone or anything that gives off some kind of magnetic field, you're going to get that echo. So you're going to want to either silence one of them or move them far apart from one another or do the best you can. But that is part of the most folks' issue is the either that or unstable internet in your location. It looks like Alan is back. So, Alan, we said all kinds of crazy things about you. I hope you're okay with that. We always like to do that when you're not here to defend yourself.
Okay,
Uh,
nothing
so
new.
uh, let's turn it over now to Alan Schwartzide. He's our managing attorney of the K. Bender Rembaum location up in the Central Florida area in the Winter Springs neighborhood, close to Orlando. Alan, take it away, sir.
And I do apologize if if I jump off, it'll just be because I'm now operating from my cell phone's internet. Just to make sure that I don't drop off, but if I do, I promise I'll be right back. So, a little bit about our firm. K. Bender Rembaum has been in the industry since 1993. All we do is represent community associations, 26 attorneys, nine including myself, who are board certified in this area of law. Um, sorry, I'm seeing the notes coming up. So nine, including myself, board certified in this area of law, one board certified in construction. Again, this is all we do. So if you're happy with your current counsel, congratulations. I'm happy for you. If you're not, or if there's any issue whatsoever, you need a second opinion. There are no annual fees other than our special collection program, no monthly minimums, no upfront retainer fees. So if you want to give us a shot, I hope you'll reach out. My email is going to be on the screen the whole time. And if you need our email address, as Jeff mentioned, I believe, but I was off for a bit, that information will be sent over as soon as the class is done and you get your email saying, hey, thanks for showing up. The other thing, when you're putting your survey information in, that information is available there as well. So if you'd like me to reach out or someone from our firm to reach out to you, just click the little button that says, yes, please contact me. But this is not a pitch, this is a class. So we're going to go ahead and let me go and get my share going, and we will get right into the actual substantive information here. So let's go ahead and move past the slides that just talk about us and get into the main meat. So we're going to start. Now, the updates that we've got for this legal update, as Jeff mentioned, this is for 2025 changes. Most of these kicked in July 1st, 2025. 99% of it pertains to community association managers and condo directors and condo operations. HOA folks, like Jeff mentioned, you're happy or we're happy to have you stick around, but understand there's nothing that only impacts HOAs here. Chapter 720 was not changed at all in July. So some of the CAM information might be relevant to you. You're welcome to stick around, but understand the condo folks are really where we're focusing, not because we don't care about the HOAs and the co-ops, but because the legislature, for once, left you guys alone this year. So, getting started with community association managers and management companies. And if I say CAM, that's community association manager. I say it a lot just to save time. So, there are new penalties for CAMs who have their license revoked. And that penalty is essentially, in addition to being suspended or losing your license, that now applies for a 10-year period, meaning you can't work not only as a CAM, but the legislature has changed it so that you can't work with a management firm for a decade after your license is revoked. What does this mean? For practical purposes, you are out as a CAM. You can't work as an admin. You can't work in any capacity as a manager. What does that mean for practical purposes? Although I hope this never happens to anyone that's taking this class, you're probably going to go to work in the vendor sector instead. Okay? Bottom line, if you do the right thing, this won't be a risk or an issue. So moving forward, CAMs and management firms need to create and maintain online licensure with DBPR, the department, which is a government entity that governs CAMs, governs condos, timeshares, mobile homes, and some other aspects of HOA operation. So this is a you need to register. Now, anyone that hasn't already done this, shame on you to some extent, but hopefully you're just getting notified by DBPR that you need to get this done because you haven't done it already. What does it require? Well, the CAM needs to identify the management firm that they're working for. The CAMs, as well as some management firms, need to update that information within 30 days after a change. So if you stop managing a community, if you move over to a different management firm, you have 30 days to give that update to this online registration portal. Otherwise, nothing really happens. You'll get a notice from DBPR saying, hey, you didn't do this the way that we told you, or the legislature told you have to do it. Can you please take care of it? There's no penalty that I'm aware of for not having done this. It wouldn't surprise me if the government decides to come up with a penalty that's not actually authorized in the statute, but to my knowledge, they haven't done that yet. Just take care of it. This shouldn't be that hard. It's just like taking care of your paperwork when you start a new job or you start working with a new company. That should just be part of the new contract process. Management firms also need to identify which CAMs the which sorry, let me start that over. CAM management firms need to identify on their licensure what CAMs are working for them. So it's a two-way street here. Both sides need to make sure that the DBPR is updated. If that license is suspended or revoked, as I mentioned earlier, the department's now going to notify not only their employer, but also all the associations they work for, which apparently is one of the reasons DBPR wants to know what associations you're working with. So be aware if you make a mistake that actually is bad enough to impact your licensure, which I've never known a CAM to actually get their license suspended or revoked. But if that happens, everyone's going to know about it. I hate to put it that way, but that's kind of the reality here. All right. The contract that you have with the association cannot disclaim the obligations of a CAM. This is your third bullet. I'm going a little bit out of order. Okay, it needs to specifically state that the manager is going to follow all of the professional standards and record keeping requirements that the statute that governs CAM says they need to follow. The first one goes next. Okay, you cannot knowingly, as a CAM or a management firm, perform any act directed by the association, meaning you can't follow the board's direction if that act violates state or federal law. What does this mean for practical purposes? If the CAM follows what they're obligated to do according to state law or federal law, they should not be violating their contract anyway, because they should be just doing what's right. But understand, this should be addressed, not that we represent any management firms, but my opinion is the management firms should be putting in their contracts, we're not going to allow you to try to force us to violate the law, because that is one of the things that will now ding your license. And management firms shouldn't be doing it in the first place if they know it to be wrong. But it's no longer, for practical purposes, an excuse to say, I knew it was wrong, but the board told me to do it anyway. That's really the practical rationale and practical outcome of this change to the statute. That's no longer an excuse for the manager to say, yeah, but they told me to do it. All right. If the contract is subject to milestone inspection requirements or CEUs requirements, and if you don't know what those are, we will get to them later. But I hope that you know what they are by now, because you've had these obligations, if you have them, for like 4 years now. So hopefully you're aware of what I'm talking about. But the management firm or CAM needs to comply with those requirements as directed by the board. Now, this is a weird thing to put in the statute, when later on we'll get to the statement in the statute that says that it's the officers and directors that are obligated to make sure that what needs to be done with these milestone inspections and CEUs is done correctly. But it's still the manager's responsibility to comply with those requirements. So basically, it's everyone's responsibility. Thanks, legislation. So doesn't really make a whole lot of sense to me, but that doesn't surprise me all that much, because the legislature doesn't seem to be asking for a lot of guidance as to what does and doesn't make sense, or what conflicts internally within the statutes at this point. So bottom line, it's everyone's obligation to make sure that these milestone inspections are done correctly and that the notice is given correctly, and same with the CEUs. The contract between the management firm or a CAM and an association can't waive or limit the professional practice standards. I mentioned that earlier. So the CAM and the manager are required, or the management firm are required, to comply with these statutes governing managers and management firms. And now that has to go into the contract itself. Okay. More importantly, when you get to your indemnity provision of these management contracts, you cannot waive the standards. So it may be that ordinary negligence is indemnified, but it can't be that statutory violations are also indemnified. This is one of those things, I can explain it to you for 15 minutes and you still might not understand it. Definitely something you want to run by your individual association attorney and make sure that this is covered under any new management contracts. Now, it's not something the legislature says we need to claw back into the contract that was already there and add this language. That doesn't mean it's a bad idea to talk to your manager about it. Moving on. Now, this used to apply only to HOAs and not to condos or cooperatives. The statute that basically says you need to give your office hours as a CAM now applies to all community associations across the board throughout Florida. Okay, so it's the providing the on the website, the name and contact information of the CAM that's assigned to the association, providing copies of the contract between the manager and the association. By the way, that's something, my recommendation, just keep a copy on your desktop for every community you manage. And then all you got to do is attach that to the email you're sending out saying, here's a copy, now leave me the hell alone. The manager also needs to attend at least one association meeting per year. Doesn't say, by the way, that the manager has to attend that meeting in person. So my perspective is, if your manager wasn't already attending at least one meeting via Zoom, call, or in person, I don't know what they were doing, unless they're only really doing your accounting. But, now, of course, the legislature thought it was important to put this into the statutes directly. Conflicts of interest. We've got another statute governing management. Now, this was kind of already in place, so I really don't know why we needed a statutory amendment, but I'll just save us some time here and say that it's pretty much the same thing as it would be for an officer or a director who's got a conflict of interest. There's a rebuttable presumption that exists if the management firm or the manager wants to contract with the association and is basically the one, or an affiliated entity is the one offering those services. You have to disclose that there's a conflict. It needs to go into the meeting notice 14 days in advance of the meeting. The contract still needs to be uploaded to the website if you need to have one, blah, 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 blah. So it's treated pretty much the same way. There are a couple exceptions that I'll get to in a minute, but essentially the things you would need to do in order to have a conflicted contract entered by the board, if or by the association, if there was an officer or director who has a conflict, are the same ones that you need to do if it's the manager or management firm that's got that conflict. Where I see this coming up is, well, the management firm is managing your community. They've also got a property, not community, but individual lot or unit management arm, and they're offering to basically rent out units that the association owns. That's a conflict of interest. That doesn't mean it's a bad idea to work with your manager on those non-management services. It just means that they have to disclose that they're affiliated with that company. It may be that you get the best deal and they take care of you the best out of every vendor that offers that same service. And I also see a lot of management having a maintenance arm now. All those services, they may provide even better for you at better costs because you're already doing business with them. So remember, we have these conflict statutes not so that you don't do business with these entities that have a conflict, but so that everyone knows about the conflict and knows about the incentive that whoever it may be, in this case, the manager, has to promote that business over others. That's all we're saying. That doesn't make it wrong to do business with them. And some communities will look at that as, well, it's just easier to not have to deal with this. Okay, but you may be putting money on the table and leaving money on the table by not being willing to do business with them. All
Right.
right, off.
And let me chime in for that. For us, it's important as a business for ACAM. Again, it's a very transparent approach. To be clear, like a lot of other associations, they have their own portal, etc. Like for instance, ACAM doesn't host their own portal because we're not an IT company. So in that sense, we're very that's like a typical example that I like to give because the portal stays with the association. So but it's good to show that as a company because it's just clear business practices, I think.
Yeah, I totally agree. I mean, that disclosure, the transparency, it's the way that we all should be operating. We're not hiding the ball here. We're not pretending that we have no interest here. We're letting you know, hey, we're all working together here.
Correct.
That's great. It's fine. It's not a problem as long as it's disclosed up front. That's all. And the easiest way to disclose this is if you've got this separate company that's doing the work, just have an addendum to the management contract that says, here's everyone that we work with as an affiliate, meaning there is a conflict. Here's what they do, and they might offer these services to you. And now you've disclosed it all up front. And I'll get to in a minute. The statute basically says that's good enough. All right, so I say I'll get to it in a minute. Let's go ahead and get to it. One of the things that the statute added, if an association receives and considers a bid, and here's the dollar figure, exceeding $2,500 for goods or services other than management of the association, that is reasonably construed to be a conflict. Not that it is a conflict, reasonably construed, meaning a normal human being would think there's a conflict here, regardless of whether one exists or not. Then the association needs to solicit multiple bids, except, as I mentioned a minute ago, if you've got this addendum to your contract that says, here's everything that here's all the companies that are affiliated with us, here are the other services we might provide. Done. Now you don't need to get those other bids. Okay, so a lot of management firms are adding this as an addendum. Frankly, from my perspective, it has zero negative impact on the association. It's not even something that I look at when I'm reviewing a management contract as requested by one of my clients, because frankly, it's just transparency more than anything else. There's no downside to having this option to have all these services done, I'll say in-house, even though it's not officially in-house, It's just an option. It's not an obligation. And if it is an obligation, I'm trying to remove that language. But if it's, hey, this is another service we offer to make your life easier, board of directors, and you don't have to go out and get bids and vote at a meeting beyond just, yes, we're going to do it, makes your life easier. I'm all in favor because you guys are volunteers. You work way harder than you should anyway. Let management make your life easier. That's what they get paid for. Um, Now, if there is a conflict, that activity needs to be listed on the meeting agenda, the next board meeting. The notice needs to include the description of the activity, disclose the conflict, and include a copy of all contracts and other transactional documents. This is the same for the most part as what you would need to do, again, if you were an officer or director with a conflict. If the manager or CAM violates this statute, basically doesn't disclose a conflict, understand that if you've signed this contract, it in and of itself is voidable, and so is the management contract due to the lack of disclosure. Now, if the contract is terminated, both of those, the association pays only through the date of termination for the services actually provided. The termination fee, the we had a contract for the next 2 years, all that goes away. Now be very careful before you presume that this is something you can try to take advantage of. Because I've seen a lot of communities whose boards found out about this statute, thought, oh, great, we wanted out of this contract. Now we can get out. And when they actually brought it to me because the other side, the management firm said, no, this isn't what the statute talks about. My response is they're right, and you've now breached your contract, and they're entitled to not work for you anymore, but still get paid for the next 2 years. So my recommendation is before you ever send a termination notice to any vendor, have your attorney take a look at the contract, have a look at what the breach was, unless it's just, hey, we're not renewing. Make sure that you are actually on the right track and that you're actually able to get out of that contract the way you think you are. Because frequently there are major penalties to terminate a contract early. This is one exception that might exist, but it might not. All right. Moving out of the management arena, we move on. And I don't know if you guys had anything you wanted to add before we move on to condos. I don't want to step on any toes, but if not, we can move on. No? All right. So, mandatory structural inspections. We're talking about your MERS and SIRS now. Okay, your milestone inspections and your structural integrity reserve studies. One of the changes to the statute, the previous statute says that milestone inspections and SIRS, which is your structural integrity reserve study, these applied to buildings that had a residential condo component and at least 3 stories as determined by the Florida Building Code. You'll note in this highlighted portion, I just intentionally skipped one word because that's the change this year. It only applies to habitable stories as of now. So if you have this top story that we're looking at in the image here, that does not count because only a homeless person would be able to live in this completely uncovered story of a building in Florida. Okay, rain's going to pour in to this top level. I'm not sure if you can see what I'm highlighting, but if you can, that's the one I'm talking about. Okay, that does not count anymore as as a story for purposes of a milestone inspection or a structural integrity reserve study. And what this means is you no longer need those things for that type of building. Now, whether the bottom story counts anymore, I don't know if any portion of this closed off portion is habitable or not. It may be office space, it may not. It may be subject to a residential condo, or if it's, let's say, in Orlando, Miami, some of the other areas that have these, it may be a mixed use condo where the bottom floor is all retail. Okay, in that case, that's not a habitable story. It's not part of the condo, it's part of the overall. So you're going to want to check with your attorney. Don't rely on anything I'm saying today to make the unilateral decision. Oh, well, thank God we didn't bother to get a SIRS or a milestone inspection report done. We don't need it anymore, according to Alan. Not telling you that at all. What I'm telling you is talk to your attorney and find out if you have a question, get a written legal opinion, because keep in mind that failing to do these things is now a breach of fiduciary duty. And if you're relying on advice of counsel to breach that fiduciary duty, at least you've got a defense to that type of claim. I'm going to skip the Board of County Commissioners, the licensed architect or engineer. This is the conflict provision regarding milestone inspections. The exact same thing's going to apply to CERS. So we can skip that when we get to it, but the person that's doing this inspection must disclose in writing to the association in advance if they intend to also perform the work that they're recommending. So let's say, for example, we're talking about a milestone inspection, and I compare this to the auto mechanic who tells you, well, your Geflurgan's broken, you're going to need a brand new one, and we're going to be the ones that install it for you. But you really don't know what that means. What's a Geflurgan? I have no idea. And by the way, I'm pretty sure it doesn't exist. But it's the gasket, the thing that no one knows what it does, what it is, but they're trying to convince you need it done. Well, I won't say where that was happening. I won't say who did it, but that was apparently happening in the context of milestone inspections and CERS. You had people that were doing this architect or engineering work and saying, up, you've got these problems. Now, more likely, they weren't saying something that doesn't exist was broken because then they can get caught. But they were seeing minor defects, which are really cracks in paint, and saying, your stucco's all shot to hell, and saying, you need to completely replace this wall. And then they would be the ones bidding on the product or the project. So the legislature has now said as of July 1st, any contract that was entered after that date, they needed to disclose in advance. Now, I don't think they could do that for a contract that already existed because they didn't have to. But for anything after July 1st, when this kicked in, any contract where the architect or engineer wants to be able to bid for the physical construction work, they need to disclose that interest in advance because they've got a very clear conflict of interest in telling you what needs to be done and then wanting to help you do the work. So if they didn't disclose it, they can still do the milestone inspection, but they can't technically bid on the work physically being done. So the legislature is reducing the risk of that conflict and the risk of that group or that individual telling you that you need work that really isn't 100% necessary. We already did that. And same deal, if they don't disclose the interest and they want to do the work anyway, that contract to perform the construction work or to perform the other milestone inspection or CERS work is voidable. They only get paid through the date that the termination occurred for whatever they bought, did, etc. We're going to skip local enforcement agencies. This is just what your local building code division or whoever it may be within your municipality is able to tell you certain things that you're required to do. If you get that notice, that's something you'll want to discuss with your attorney, but most likely whatever your local building official tells you need to do or you'll be condemned, you should probably just go ahead and do it. Moving on to other condo issues, video conferences. So this is kind of annoying, but it's okay. So the term video conference was added to the statute. Anyone that didn't know what that means before, I don't know what to tell you. But the legislature seemed to think it was necessary to define what a video conference was, even though it was already kind of defined in the statute. The notice, this is important, for any meeting that will be conducted by video conference, meaning Zoom, Teams, any of these other pieces of software, GoToMeeting, whatever it may be. That notice needs to include the hyperlink and a call-in number for unit owners to be able to attend. Now, this is if you're holding it and conducting it by video conference. There also needs to be a physical location where all owners that want to can attend the meeting in person. All meetings conducted by video also need to be recorded, and that recording is an official record of the association for 1 year after it's recorded. Now, let's go through a couple of these things because I have some thoughts, but I wanted to get through the information first. The notice needs to have a hyperlink and call-in number. If you're using a free version of Teams or Zoom, you're probably not getting a call-in number. So you're going to need to pay for those programs. And what I would suggest is have the association pay for it instead of using someone's individual. Or if your manager is willing to provide theirs, your attorney is willing to provide theirs for meetings that they're attending, great, good for you. But that's not automatically part of the management contract. And unless the management contract says they're obligated to have a Zoom or Teams account, they technically aren't required to. So understand, this is not automatically something that your manager is going to provide at no cost to the association. The other thing that I'll point out, the physical location, you already had to have that. So why this is a problem for so many people, I don't understand. People are freaking out that they need to have a physical location for a Zoom meeting. That's always been the case because until now, there was no statute that said you could have all your meetings on Zoom. So let's move on. And then needing to record and keep copies of that meeting, all you got to do is provide the link that Zoom or Microsoft Teams provides of the recording, keep it all in one Microsoft Word document, and upload that document to your website and delete and re-upload it every time you add a link. Anything that's older than a year, delete the link. Done. As long as you're not paying extra for Zoom or Teams to store that, you don't have to put the actual recording on your website. You just need to make it accessible to people. So people were freaking out about how are we going to store all these gigantic meetings? You're not. Microsoft is, Zoom is, GoToMeeting is. Now make sure that you use a piece of software for that meeting that's willing to store it as part of your subscription fee, but it's not that complicated. Now, the other thing that I've pointed out, and some attorneys don't agree with this, so check with your attorney, get a written opinion before you do it. But my perspective is if the meeting is conducted by video conference, that's one thing. It's another thing to hold the hybrid meetings that everyone's been holding since COVID started and have an in-person location that is the primary and having a secondary option to attend by Zoom or phone like everyone's been doing for the last 6 years or more. The statute has said since I started practicing law that directors can attend these meetings by phone as long as everyone can hear what they're saying. Same thing with video conferencing software. So if you want to avoid a lot of these obligations, my perspective is you notice the meeting as being held in person and you provide the option to attend virtually or by phone. Then you don't have to comply with any of this stuff. Now, the better way is definitely to just comply. But if this is really that much of an imposition to your board, maybe that's a way around it. All right, moving on. Non-residential condos, I don't really know of many that are dealing with this issue. So it's in the slides, it's in the statute. You'll get a copy of the slides at the end of the presentation. So feel free to read through and get to number 17 because we're not going to go through it in detail. And there will be some of this stuff that I skip. It's not that I think it's unimportant. It's that I'd rather get to the materials that affects 90% or more of the people on this call versus going through a slide like that for 5 minutes. All right, associations and CAMs. If there is a management contract, the manager or the person that's contracted needs to be licensed in accordance with the CAM statutes. Why we needed a statute to say that when it was already required by law, I guess it's so that the obligation is now on the association to find out because it's now on the officers or directors to find out whether that person or that management firm is properly licensed before entering into the contract. Before it was on the CAM to be licensed, now it's on both parties to make sure that that licensure exists. My suggestion, if management is willing to do it, they just attach to their proposal package a copy of their license or notice of good standing coming from DBPR. That's it. That's all that's required. And if they don't do it, then it should be very simple to look on DBPR's website and search for that licensure. I think it's myfloridalicense.com or something like that. If the contract is between the manager and the association and the manager is suspended or revoked as to their licensure during the contract, again, terminate the contract or the association may terminate the contract, and that is effective on the date of the unlicensure. Now, I don't know how the association could continue contracting with someone who is no longer qualified to be a CAM for 10 years. That makes no sense to me. How can you stay in that contract? So presumably this is optional, but in reality, it's mandatory that you have to terminate that contract because the person can't serve. And because they can't serve any other management function for 10 years after that license is revoked, unless you're willing to just do the work and it's a suspension for the 6-month period of suspension, that contract should be terminated immediately. Now, if the management firm is suspended or revoked, same deal. All right, insurance. Every condo needs to have adequate property insurance. They added the word adequate like we didn't know that already. Again, a lot of the changes that seem to be made are someone wanted their name on a bill, and congratulations, we added words that were already implied. Now we're making it explicit, so it's sort of an accomplishment. But the association does need adequate protection, adequate insurance. Adequate is now basically full insurable value, replacement cost, or similar coverage. Okay. Now that can be based on the replacement cost of the property to be insured. That needs to be determined by an independent insurance appraisal that needs to be done at least once every 3 years. So every 3 years, you've got someone coming onto your property to make sure that when you are valuing the insurance cost to replace all of these individual items, sound familiar? This sounds like a reserve study to me. So hopefully the person that does this appraisal can also do whatever reserve studies you've got that are permissive or mandatory rather than paying two people to do this appraisal, unless it's coming directly from your insurance company. Maybe you can save some time and money by having them do both. Now, if it's coming from your insurance company, you will have to pay separately, but hopefully you're able to take advantage of some of this. But that needs to be done. You need to figure out what the property's worth that's being insured at least every 3 years. And the obligation to obtain and provide adequate property insurance. You can use a single policy for at least 3 communities. I will say this in another bullet point that I think is in the next slide. Kind of a waste because in reality, the legislature has made it so complicated to try and combine that insurance that usually when clients ask, I've had 3 or 4 ask over the last few years. Anytime I tell them what the first requirement is, their response is, yeah, never mind, we're good. We'll just go ahead and get our own insurance. Official records. This is another one. I don't know why it was necessary because we already had the catch-all that any written record pertaining to the operation of the association that wasn't already in the statute is an official record. But now we've got a copy of the official records rather than a photocopy needs to be provided to the owner. That's so that we can do it digitally. Books or electronic records that contain meeting minutes are now official records. If they're approved minutes for a meeting held by video conference, recordings must still be maintained for 1 year if that was held via video conference. Again, if it wasn't held and it was, oh, there's a video conference option, my personal legal opinion is that you probably don't need to maintain that. But because it's so easy to just say, oh, I won't delete it for a year, you might as well just go ahead and do it anyway and not take that risk. And then accurate, itemized, and detailed records of receipts, including bank statements and ledgers, are official records. That does not mean that every account number can't be redacted off of those official records. So that's something you'll want to get an opinion from your attorney about. And then copies of all affidavits required by Chapter 718 are official records. Now, I think there's an exception, but I'm not sure. I haven't really reviewed this recently for the affidavits of mailing notices of late assessment. But keep in mind, because the ledgers for each account are official records, it wouldn't surprise me if these are included in all of these affidavits as well. In addition to having an adequate number of copies of the governing documents, you now need an adequate number of copies of the Q&A sheet that every condo is required to have, the most recent annual financial statements, and the annual budget. The way that I suggest, because you're allowed to charge for this, but you're required to give it up quicker than any regular official records inspection, just have, if you've got an office on property or at the property manager's office where you're doing these inspections, keep one physical copy. Note how many pages are in each document so that you can calculate towards your 25 pages that the owners are entitled to for free. And that way you know what to charge if they want copies of the entire package. Once you give up a copy of it, you make another copy and you put it in that folder or binder or whatever it may be so that you've always got this accessible. But the statute says an adequate number of copies. You may have a community where people are asking for this stuff all the time, but my experience has been people don't even know that this statute exists. So if you've got one person per year coming in and saying, I want the governing documents, I'm entitled to them right now. Okay, we've got one copy printed. That's probably adequate. but the statute doesn't define what an adequate number of copies is. So there's really no way of knowing. Uh, the other change that was made regarding official records, it used to be last year if the board or director or a member of the board, which is the same thing, or the association or a CAM willfully and knowingly and intentionally violates the official records inspection requirements, meaning you're not giving up your records when you're supposed to, that was a misdemeanor of the second degree after your second time in 12 months. This is now any time that you fail to give up the records, it's a misdemeanor. So, bottom line, maybe just give them up. Do you really want, as a volunteer, to be hit with a criminal violation for holding back records? Probably not. So just produce them upon request because that's your legal obligation. The website, a document that needs to go on your website needs to go up within 30 days. The additional documents that the statute added, again, we're only talking condos right now, not HOAs. But if you need a website, the approved minutes of the board meetings over the last 12 months, the video recordings that we talked about, and all the affidavits are now official records that go on the website, not just official records. And as a reminder, this kicked in January, but it used to be anyone that had 150 units or more needed a website. Now it's 25 units or more. Almost every condo in Florida now needs to have a website. Now, if you are still with us and you're in HOA land or you're in co-op land, it'd surprise me if that doesn't catch up and you guys aren't required to have a website if you've got 25 units, lots, parcels, whatever, or more as of next year or the year after. And keep in mind, 99% of the management firms out there offer this service as part of their services so that you don't need to go out and have an independent website created that frankly costs $5,000 to $10,000 plus an ongoing maintenance fee. You can just have your management firm portal serve this purpose and move on with your life. Okay.
Yeah, and I've seen this again. It's more the transparency approach of how the state is again put the information there. It's gonna help with your records request. At the end, let's work practically, right? It's the association's information, so it's there. So I think, like you said, in the past it was 150, now we're at 25. At the end of the day, pretty much everyone's gonna have to have a portal. That's where the state is heading towards.
Agreed.
And
So put
just
it
a
in your budget. Now the budget season is gonna start.
exactly. Quick interjection, Alan, before you continue, and thank you, Maureen. Very valid, great information. There's a few of you that are in the chat telling me that you got bounced back and came back in. We can tell, no worries about that. But one thing that is concerning me, a lot of you shared your join links with somebody else. So I have, for example, a person named Bill appearing as Peter. I will place the registration link into the chat. Never share your join link with anybody. Only share the registration link. Otherwise, we have no proof that you're here, should you ever get challenged. So
Right. Peter's here,
anybody
not
that did
Bill.
not use your own link, we don't want you to be wasting your time. I'm going to put the registration link in the chat now. If you came in, if your name is not appearing next to you, where on the upper right-hand corner, I'm going to place that link now so you can register and come back in, and you'll still get your credit. Don't worry. But I'm going to do that now. So if you don't see your proper name, please do this. Back to you guys.
All right, thank you. And yeah, Maureen, great notes, great points. I appreciate that. Some more condo changes within 21 days after the final financial report's completed or received from a third party. This is your year-end financials, but not later than this is the number that changed. This is now 6 months instead of 120 days. Okay, that's when you need to produce it. Or you need to notify the owners that a copy will be, as requested, mailed, hand delivered, or electronically delivered via the internet. So that's basically you're going to provide a copy in some way within 5 business days after receipt of a written request. This is not an official records request if they're asking for the financials. This is a separate type of request and it's done at no charge. So you need to provide a copy to them, or you can just say, if you ask for it, we'll provide it within 5 business days. Most people just send a postcard and say, hey, if you want a copy, let us know. Now, for those that have opted into electronic notices, it can literally be an email blast and it's that simple. So that's one reason for people to opt in because frankly, the association saves money and your assessments go down when you opt into electronic notices. Now, evidence of compliance with the delivery requirement needs to be made by an affidavit. This is one of the first three that we'll get to, executed by an officer or director. When is it ever going to be an officer or director in a managed community that sends out this notice? So this is a requirement that doesn't really make a whole lot of sense to me. My perspective is it's the legislature trying to hold officers and directors accountable for things that they're not really the ones that they're doing it. All they can really attest to at this point is that they physically watched the manager put the notices in the mail, or they got a copy of the notice that was sent to everyone. This is bad legislation, in my opinion, but it's what we're stuck with until it changes. So understand this is not sufficient if the manager's the one that says, yeah, we mailed out the financials, or we mailed out the notice, or emailed out the notice that the financials are available. This must be an officer or director. Association can still prepare an alternative report, meaning you're dropping down one level in your financial reporting if a majority of all voting interests say that that's what they want. It's not a majority of those there when you have a meeting with a quorum of the members, it's a majority of all votes now. Again, another statute that I don't think we needed, but maybe it's helpful. You need to use best efforts to make prudent investment decisions, carefully consider risk and return in an effort to maximize returns on invested funds when it comes to your operating and reserve funds. That was already the fiduciary duty of each director, so I don't know why we needed this new statute, but here it is. The association can invest reserves in any combination of CDs, deposits at a community bank, savings bank, commercial bank, savings and loan, or a credit union without a vote of the unit owners. What does this mean? The board gets to decide where that money gets invested or stored. It's not a member vote. I have seen people arguing about this even after the statute made it crystal clear. So understand the board alone, without a member vote, gets to decide where that money is stored or where it's invested. Board meetings can be conducted in person by video. Division's supposed to adopt rules governing requirements for board meetings, but hasn't done so. That was supposed to be done in July. Here we are. It's now May that we're recording this. So basically, you follow whatever your governing documents and the Florida statutes require as of now in having these meeting minutes. We already covered all of the rest of this, so we can move on. The annual meeting used to be held within the county or within 45 miles of the community. We're now down to 15 miles. So if you've been having your annual meeting at a different location outside the community that's outside the county, you now need to shift your location if that location's more than 15 miles away. So it's basically saying, let's make it easier for people to attend the meeting. Let's make it harder to conduct that meeting by video while simultaneously saying, let's make it easier to attend in person. I don't get that, but the legislature made that decision and it's what we stick to. But again, 15 miles, not 45, or within the same county. So if your management office is not in the same county as your community, make sure it's within 15 miles if you're going to try and hold your annual meeting at their offices. That meeting can also be conducted in person or by video conference. If it's conducted by video, this is another one that's kind of questionable. Quorum of the directors need to be physically present at the physical location where unit owners can attend. Now, it doesn't say what happens if they're not, but it sounds like you can't have the annual meeting unless you've got a quorum of the directors physically present in person. So if the directors want to stay on the board, what do? If there's an election that would otherwise be had, they choose not to attend and you can't have an election, according to this statute. So this is a loophole that I hope gets fixed because I'd much rather see, if you're supposed to have an election, give other people the opportunity to serve if they're actually willing. But as of now, it seems like this loophole is basically don't show up if you don't want to risk losing the election. If a unit owner meeting is conducted by video, that video is recorded. And again, that is a official record for a year. Unit owners can vote electronically if you have electronic voting. There's another method of electronic voting that we'll get to that is horrendous. And I will tell you why you should be using an actual electronic voting vendor if you're in a condo, regardless of whether you want to or not, in just a few minutes. Division can adopt rules or must adopt rules governing requirements for unit owner meetings. They haven't done that yet, to my knowledge. Broadcast notice on CCTV is no longer allowed as the alternative to physically posting notices anymore, probably because it's not 1985. I don't know many communities that were broadcasting this type of notice, so I don't know what to tell you, but hopefully no one was doing that because it's not good enough anymore. Moving on to budgets. The meeting of the board or unit owners when the proposed budget will be considered may be conducted by video. Division's supposed to adopt rules that they haven't adopted yet. The sound transmitting device, meaning a microphone and a speaker, must be used so that the conversation can be heard by everyone attending in both manners, both in person and virtually. If the board proposes, this is the 115% rule. There are some changes to it this year. So it used to be if you were proposing a budget that was more than 115% more than last year's budget, the members could say, no, 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 we don't want these huge increases in assessments, and we're not going to stand for it. We're going to propose an alternative budget that'll then be voted on. Now, the board has the obligation to propose that alternative budget, and it needs to remove any what the statute calls discretionary expenditures that are not required to be in the budget. Now, I don't know any community that has any expenditures in the budget that they didn't need to have because everyone's trying to reduce assessments, not increase them. So this statute doesn't make sense from a practical standpoint, in my opinion. But okay, it is what it is. Now, the other thing that people don't understand from what I'm seeing, and by the way, if you're simultaneously proposing that alternative budget, the members do get to vote for some reason at a board meeting on whether to adopt it. Now, usually the difference between a board meeting and a member meeting is who gets to vote during that meeting. Now, all of a sudden, the legislature is throwing that out completely. Members get to vote at this particular board meeting. So keep that in mind. Don't make the mistake of saying, no, you don't get to vote. The board makes this decision. This is a member vote. But keep in mind also, 99% of the time that I've ever seen this 115% rule invoked, it didn't actually apply to the circumstances. Here's why I say that. That 115% calculation doesn't include your insurance, and it doesn't include your reserves. Usually, those are two of your biggest expenses out of the entire community. So if you're pulling all of that out of the calculation, you're probably not actually increasing your overall budget that doesn't include those items by more than that 115%. You're probably reducing it significantly less when you don't include those two items, because usually those are the two biggest increases. All right. The adoption of that alternative budget by the members is a majority of all the voting interests, unless the bylaws require a higher percentage to adopt that alternative budget. If it's not adopted, you just use the real proper budget. Now, this needs to be provided by hand delivery or mail, or at least 14 days before that budget meeting to all the members if you're going to have that 115% rule kick in. So understand you're going to have to provide that way in advance, 14 days, not 48 hours in advance. My suggestion, just give the 14 days notice for any meeting where assessments will be considered, because people read that requirement for special assessments as applying to all assessments being adopted as a 14-day notice. Keep in mind also, if your bylaws say 30 days for adoption of assessments, give the 30, because that's what the statute says. It's 14 days unless the bylaws say you give longer. All right. Your reserves, any budget that's adopted on or after December 31st, 2024, so all of them now, the members of a unit owner controlled association that needs a CEUs can't determine to provide no reserves or less reserves than required for your structural reserves, except if you're operating a multi-condo, you can provide no reserves or less if an alternative funding method has been approved by the division. I have not heard of the division actually approving any alternative funding methods, so the likelihood that this actually kicks in practice, I haven't seen it in my practice in the 4 or 5 years that this has been kind of the law. Now, this is one that the legislature, in my opinion, got right. They took that $10,000 catch-all for reserves, meaning if anything costs 10,000 or more and is a maintenance, repair, or replacement expense of the association, that's not going to happen at least annually, meaning it's not something you do every single year and you just shove it into the budget. That $10,000 figure has now increased to 25,000. So you're going to have to put away less in reserves than you would have in previous fiscal years. Now, the better news, that figure is increasing annually every February based on an actual CPI figure. It's not just DBPR decides what to increase it. They're going to post on their website the inflation adjusted minimum that this 25,000 has increased to be. So it's not every 5 years like you guys have seen with the estoppel certificate fee increases. This is an annual increase to this $25,000 figure. Now, the question that I've also gotten is, okay, well, what do we do with dollars that we've put away that technically are no longer reserves because this is a $15,000 expense that we no longer have to reserve for? My perspective, either it goes into a separate category that's related to what you had it for. Hopefully it was in a pool and you can use it for anything else that was in that pool. You just remove this item from the pool so that you don't have to put money away for it in the future. Or you get the member vote to move the money or say, we're going to use it for an alternative purpose. Now, keep in mind, if you are changing your reserves and you had to have a structural integrity reserve study, you need a new one. You can't just unilaterally decide, well, the legislature says we don't need this reserve anymore, so we're just going to change our budget. Doesn't work that way. You need the person that did your CEUs to give you an update without including that as a mandatory reserve. You can still maintain it as an optional reserve, non-structural, but there's nothing that says you have to do that. You don't need membership approval if you're going to pause your contribution to reserves if the local building official determined that your building's uninhabitable due to a natural emergency. Keep in mind, that is, you're not putting money away because you can't live there, but it's you can't live there due to a hurricane or a natural emergency. It's not you can't live there because you didn't maintain the building well enough. Now, there's another statute that says that instead. Your reserves can be pooled for 2 or more required components. So that's the pooling I talked about a minute ago. It is now legislatively approved to use the pooling method for your reserves. But CEUs reserves cannot be commingled, combined, kept in the same pool as non-structural reserves. So you need at least 2 pools if you're going to do it that way. Or you can have a pooled reserve for one and straight line reserves for the other. Most people that do a pool just do 2 separate pools and move on with their day because frankly, that means they put less into their reserves every year than if you had a straight line for each component. That's one of those, talk to your accountant or your structural integrity reserve study, that specialist who's preparing it to figure out which one would work best for your particular assets and community. The reserve funding indicated in the proposed budget needs to be sufficient that you meet proposed expenditures and it never goes below 0. Your reserves can never go below 0. They can get to 0, but you can't pull from nothing. Okay, so you can't account for pulling from nothing. A vote of the membership isn't required for the board to change from pooling to straight line or back, but you may need that member vote, as I mentioned, to move the actual money from one account to the other if you've gone from straight line to pool and back and forth. If you vote to terminate, you can vote also to waive maintenance of reserves because you're not going to be the owner much longer, and there's not going to be a future condo that even exists because you're getting rid of it. You're generally either converting to a new condo that'll have its own reserves, or you're converting to an apartment complex that the owner of that apartment complex will be obligated to maintain the building in the way that the apartment related real estate statutes require. So there wouldn't be a CERS, so there's no reason you have to keep maintaining if you've already had the vote to terminate the condo. Now that doesn't mean you have to have the termination complete. It just means the vote was taken and it was legally sufficient that after you go through the lawsuit and all the other things that are required to terminate, you're done. Okay. CERS reserves can be funded by regular assessments, special assessments, lines of credit, or loans. Those last 3 will require a member vote. This is kind of a mess because Some of your governing documents say that the board gets to decide we're going to get a line of credit or a loan. And now all of a sudden, or levy a special assessment. And now all of a sudden, you've got a statute that says, well, you need that member vote anyway. And what happens when you inevitably can't get the member vote because your members don't care enough to show up? My perspective, talk to your attorney, but the case law in Florida seems pretty clear in my opinion. You've got to do what you reasonably believe to be in the best interest of the association. And if that means levying a special assessment that wasn't approved by the members, you got to do it because these are reserves that are mandatory according to Florida law. And you have a fiduciary obligation directly stated in the Florida statutes to make sure that you comply with these requirements. Let's see. Unit owner controlled associations that need a CEUs can secure that line of credit or loan to fund capital expenses required by those milestone inspections or CEUs. That doesn't apply if you're developer controlled. So they need to fully fund it on their own or collect enough assessments that it's fully funded. The line of credit or loan needs to be enough in dollars to fund the entire amount of anything you waived in the past, and it needs to be accessible, meaning that you can tell your bank, hey, I need my money today, and you can access the full, whatever the dollar figure is in that line of credit, up to the full amount. It can't be, oh, we'll put in a request and the money's available in 30 days. That's not good enough under the statute. For budgets adopted on or before December 31st, 2028, which is also now, if the association completed a milestone inspection in the last 2 calendar years, the board, getting a majority of all interest to the association, can pause for up to 2 consecutive annual budgets, your reserves, or reduce them to complete the repairs that are required by a milestone inspection. What does this mean? If you have, excuse me, I mentioned this earlier, if you're going to have work done on your building because it's falling apart, you don't need to put more money away to reserve for something else that you don't need yet and you won't need in those 2 years. You can spend the money so that everyone is able to afford to live there and you don't get condemned. You can spend that money immediately, take care of the major problem, and then move on with your life and go get a new CERS, which you're required to do when you have that construction done. So once you do something that impacts the useful life or the cost of maintaining or repairing one of these components, you need a new CERS that accounts for the updated figures. Okay, if you've paused it, you need the CERS before you start collecting reserves again. What does that mean? Before that 2 years is up, you should really be pushing to get that updated CERS in. You shouldn't be waiting until the last minute because otherwise you might not be able to comply with this 2-year limitation.
Yeah, Alan, and this is very interesting in the practical sense. It's best practices, although the law doesn't require to do it every single year. If you have a lot of these components being done and worked on, definitely work with your association's reserve expert to make sure it's updated because that's where the big funds are allocated and start moving. So there, it's a lot of moving pieces, and you do really want to make sure you're protecting the association by budgeting correctly.
Yeah, absolutely agreed. I have nothing to add because you covered it. So thank you and good job. Okay, we already covered most of these things. This is the 10,000 went up to 25, so we're going to skip it this time around. We already covered most of this other than I mentioned can't go below 0. That's all the baseline funding plan is. And let me reiterate because people still aren't fully understanding. Fully funding your reserves doesn't mean you've got every penny that you need until the end of time when every single component's going to be repaired. It doesn't mean you have to have $5 million in the bank. It means that whatever your reserve analyst tells you you're going to need over the course of the next year needs to go in your budget. Whatever the reserve analyst says you're going to need over the next 20 years goes into your budget for the next 20 years, hopefully with some kind of inflation adjustments incorporated by the analyst. It doesn't mean you have everything for every component all the way 20 years in advance of when it's expected to fail. It does not mean that, period. Okay, so this is something that I see a lot of people getting wrong. You don't need that kind of cash on hand. It's just accounting for what's needed when it's needed. So you're allowed to divide your estimated useful life in years into the dollar figure you need to have. It's not, here's the dollar figure, you need it tomorrow. All right. Off the soapbox, the CEUs need to take into consideration how you're funding all of this. Is it regular assessments, special assessments, or some kind of loan? If the CEUs is performed before the association approves a special assessment, again, you need to update it to address how you're funding that fund. Hate to use that term, but that's what I'm going with. It needs to be updated to reflect any changes to useful life I mentioned, and the association needs an updated CEUs before adopting budgets that don't exactly say what the CERS says you need to put aside. So if there's any change in circumstances, you need a new report. Hopefully, you've contracted for the next 5 years that instead of needing a new report, you're going to have an amendment to the existing report, and your CERS analyst, whoever's working with you, is going to charge a drastically reduced rate because they don't have to start from scratch. All right. CERS is not required for 4 family dwellings. We had 1, 2, and 3 with 3 or fewer habitable stories above ground. Again, the word habitable being added. Let's see. All of this is stuff we already had. Officer or director needs to sign the affidavit acknowledging receipt of the completed CERS. Same with milestones inspections. And again, that's a little odd because it's usually the manager that gets all that information and would normally sign that affidavit. I guess when the manager gives the information to the officer or director, that's when they can sign this affidavit because then they can say, I actually received it on this date. And the division needs to adopt a rule for the CERS in coordination with the Florida Building Commission. Still hasn't happened to my knowledge. Oops, I think I skipped one. Yep, sure did. But this is the conflicts that we already addressed, so I'll skip it anyway. Hurricane protection. Unless the declaration says otherwise, a unit owner is not responsible for the cost of removal or reinstallation of their hurricane protection, including exterior doors, windows, other openings, which is what apertures means, if the removal is necessary for something the association is obligated to do. So if you are repainting the building and you can't do that without removing the shutters that someone put up, the owner is not responsible for that expense of removing and putting them back on if the association was the one obligated to do that work. Now, a couple things. One, this might be one of the amendments you work on if you're working on amendments to make it clear who's responsible. The association does the work. I agree with that. But it's the owner's fiscal responsibility if they put something in that doesn't meet association standards in general, or it's something that needs to be removed and replaced. Unless it's something that everyone across the board has, my perspective is the other members shouldn't be paying to replace what one person has or remove it and replace it. The other thing that comes up in practice, and I've already seen it come up a couple times, is who's responsible for replacing something that is no longer code compliant and the vendor won't put back on. Now, my perspective is the owner is not obligated to pay for the removal, but if they want something put back on, that's their responsibility because the association took it off. Totally get that. Unless the declaration says otherwise, that's an association expense according to the statute. But the association's not responsible for buying you new shutters because it had to repaint the building. That just isn't what the statute says at all, in my opinion. Now, the board is the one that gets to determine whether the removal or reinstallation needs to be completed by the unit owner or the association if the declaration isn't clear on that point. Usually, I would say let's leave it to the association because that removal and reinstallation is going to impact the security of the building envelope. And I don't want the owner's contractor drilling holes into the building or otherwise impacting the watertight nature of the building that you're paying to take care of because they wanted to reinstall the same hurricane protection. I'd rather leave that to the association, but it's a board decision unless the declaration says the owner gets to make that decision. All right. Evacuations. If you tell someone there's a mandatory or voluntary evacuation for our area, get the hell out of Dodge, and they choose to stay, any damage that occurs is on them. Now, I can't see this really coming into play other than personal injury. In other words, someone gets physically hurt because I can't imagine what contents of a unit would be the owner's, the association's responsibility. But bottom line, the association's immune from liability or injury to persons or property arising from their failure to leave when you tell them, hey, there's a hurricane coming, it's a Cat 5, go somewhere else. And they choose to stay because, well, they're Floridians. I get it. It happens. But that's now financially completely on them. Electronic voting. I promised we'd get to this later, and here we are. A board meeting where you're adopting electronic voting no longer has to be a 14-day notice in a condo. HOAs still need to do it, co-ops still need to do it, but this is a 48-hour posted notice just like any other board meeting. If at least 25% of the members ask the board by petition to adopt electronic voting for the next scheduled election, the board needs to hold a meeting within 21 days after receiving that petition. If the petition's received within 180 days after the last annual meeting. What does this mean for practical purposes? If you get 25% of the members asking you to adopt electronic voting no later than 6 months after the last election, you're required to hold the meeting. Now, the statute says hold the meeting to adopt the resolution. It doesn't say you have to actually do it. It's the purpose of the meeting. My perspective is you're going to want to do it anyway, but don't just presume because you're holding a meeting for a certain purpose, that means you automatically have to do it. My opinion is the statute isn't clear enough to say that you must adopt electronic voting. But I think personally, I think it'd be frankly legal malpractice for any attorney not to recommend at this point that a condo adopt electronic voting. And I will explain why in a minute. It's this right here. If you don't adopt electronic voting, then you have to follow this new procedure as a condo having its election. You have to provide a separate ballot from the regular ballot that is used specifically to email their ballots to you. You have to create a separate email address that's going to receive just the ballots and nothing else. Now, hold that for a minute. You have to have that ballot contain very little other than this statement that's at the bottom that you're waiving the secrecy of your ballot and it's no longer anonymous. The signature on that ballot to verify that it's the person who's voting or that's supposed to be the one voting is just them typing their name. It includes a space for the unit number, it includes a space for their first and last name to be typed, which is the signature, and it includes that statement that's at the bottom of your screen right now. How easy do you think it would be to defraud the association, who is not allowed to reject anything because the email didn't come from a recognized email address, who is not authorized to reject any of these emailed ballots according to the statute? You have to accept them, you have to review them. What is the likelihood of or potential for fraud when all it takes to completely shut down the election is to submit 1,000 ballots that the association then is required to check, even though they've got 50 units total? Or to submit 2 ballots for the same person, which are then discarded because they submitted more than 1 ballot. Or to submit a ballot electronically on behalf of someone you know is going to show up at the meeting and vote in person. All of these things, there's no verification whatsoever that the association, not that they can do, but that they're allowed to do, to confirm that the person submitting these ballots from whatever email address you want is actually the person voting. Now, the DBPR should be adopting rules regarding this. I don't think they've done that yet. But the bottom line is this is basically almost guaranteed to create fraud in Florida. At least that's my opinion. And the way of avoiding that fraud is by adopting electronic voting. And if you adopt electronic voting, which is where you use a vendor that's vetted, qualified, and does the electronic voting in a statutorily compliant manner, all of a sudden, now you don't have to do any of this stuff. If you don't use electronic voting, you have no choice but to allow people to vote this way. So avoid the fraud, have the documents easily counted, because keep in mind, electronic voting means people can click on their phones. They're more likely to vote if it's easier to do so. And they don't have to go to your meeting. Or they can attend via Zoom and still be able to vote. All that makes it easier, and it makes it less likely that you deal with this type of fraud. So my perspective, it's negligent at best to allow these electronic ballots to be used in your elections. Let's see. We'll skip that because I already covered it. We'll skip non-residential condos of 10 or fewer units because I know of like 3 in the state that exist. Um, and again, you're welcome to take a look at the materials here. We're going to make sure that everyone gets a copy as long as they click through and actually take a copy. Now, we will cover the multi-parcel buildings, which realistically we're talking about either mixed-use condos where you've got partial retail, partial residential, or condominium hotels, which are prevalent in South Florida and some in Orlando. Within 60 days after the end of the fiscal year in those types of condos, the owner of the portion of the building that's not the condo needs to provide to the association a complete financial report of all of the costs that the association is allegedly responsible for paying. That report needs to include copies of receipts and invoices to prove what they spent, meaning what the association is obligated to pay. And if the owner doesn't provide the report, it's almost a no harm, no foul, or at least no benefit to the association, other than that we need to now report to DBPR that we didn't get this report within the 60-day period after the end of the fiscal year. So DBPR, you get to fine them and you get all the money that in reality we should be getting, or some kind of break on this. But that's not the way the statute works. Now, the other thing that was added to the statute is after you do get this information, kind of like an election challenge, you only have 60 days to challenge this mixed use aspect or the condo owners' allegations of what you owe them for the year. And if you don't do it within 60 days, you owe it. You've lost the right to challenge it. Now, it doesn't specify in the statute how that challenge is to be done, but it does say that it's governed by Section 720.311 Florida statutes. What does that mean? You're sending an offer for pre-suit mediation if you disagree with what this says. So take a look at that statute, or more likely have your attorney do so, but that's generally going to be the same way that an HOA or a condo would preferably address any dispute over covenant enforcement or several different issues that are listed in this statute. That's the way we deal with these types of disputes. The division gets more authority over milestone inspections, repairs required by milestone inspections. It requirements for condos to have insurance or fidelity bonding for people who control their money, condo board member education requirements, and reporting requirements for CEUs. So all of the condo operations that have been created by the statutes over the last few years, they were already within the authority of the division, but we've made it clear so that people that are raising arbitration to say the association's not doing what I think it's supposed to do, that's now all governed by DBPR. This was required nearly a year ago, so if you're not doing it, I don't know what to tell you. Hopefully you've already gotten that 45-day notice that you are a condo and you're required to create an account with DBPR. That is an online account. The division can require you to provide that information no more than once a year. Basically, hey, you need to give us an update and make sure this is still accurate. Now, the information that you're putting online is where's the association located? How big is it? Have you had your CEUs or milestone inspection done if you're required to? A lot of other information that actually is in this slide right here. This is everything that needs to go into the online information. What I have seen that people have questioned, and their right to question, DBPR is asking you to upload a copy of your CEUs and saying it's optional. It is optional. You do not need to give them a full copy of the entire report. That is not an obligation the association has under any Florida law. You have an obligation to report that you've actually done what you're supposed to do, and I think it's the summary that gets uploaded, but not the full report. All right, moving on and off the soapbox again. My Safe Florida Condo program is a fantastic program that the government's put together. I am usually against using government money for anything private. That's my political side coming out just a little bit. But the reality is, I think this is a great program and well worthwhile because it's protecting the entire state's finances. The practical aspect is this is money that the government is giving to community associations, in condos in particular, to either study what you can do to shore up your building in the event of a major storm or hurricane, or do the actual work to shore up the buildings. It's a dollar for every dollar the association spends, the government will give $2 to the association for these particular purposes. Now, the statute that the House bill that created this is really extending it. This is going to be year 3 once we hit July that this program hopefully will continue existing. The problem is this money is gone within a week or two after it becomes available every year because who the heck doesn't want free money to make their buildings safer and avoid the major leaks that most people end up with after a major storm. Now, I'm going to skip some of this stuff, but a couple of the changes. The definition of condos doesn't include detached units on individual parcels of land. So land condos, I guess, can't use this anymore. It's specifically to protect buildings. Condos can't apply for the inspection or grant unless the associations comply with milestone inspection requirements. So you know what's wrong with your building that you're already required to fix. And structural integrity reserve requirements, same reason. The condo can't apply unless the windows of the association are established as common elements, meaning you can't have the government pay for unit owners' individual windows. And it reduced from 100% to 75% of the unit owners that need to approve the application. Why you need member approval to get free money is beyond me, but it's one of those things maybe you should probably consider if this is something you're going to do. Go ahead and get that vote in advance. Maybe not now, but in June, try and get the vote so that you're ready in July or whenever this money might become available. And it had some other clarifications. We had a timeshare plan management clarification as well that I'm not going to touch on because I don't know many timeshares that are still operating and working with management companies or our firm. Administrative procedures, you're not an administrative person if you're on here, most likely, so you can read this if you want. Education and correctional facilities, understand the correctional education program needs to develop a plan to allow DBPR credits to be accumulated while you are in jail. I don't think that someone who's just getting out of jail with a brand new CAM license is going to be allowed to be licensed. I could be completely wrong, but bottom line, this is a program that provides education and allows people that are within jail or prison to be educated. I don't know how this works in practice when it comes to why the DBPR thought this had to go into our presentation, but that's what they said to do, so we did it. Flood disclosures. This is where the association owns the property or is renting property. Otherwise, it won't apply to the association. So we include it anyway because if you're the owner, meaning the seller, or you're the landlord, or you're the developer of a community, then any unit that's had a flood in the past, that needs to be disclosed to the person who's renting or buying that unit. So that's the disclosure that's required. If there's known flooding history, any filed flood insurance claims, or federal and non-federal assistance received, so FEMA or otherwise, you need to disclose and has a broad description of what flooding includes. So bottom line, make sure you disclose it because otherwise, under certain case law, the association can be sued for non-disclosure, and the tenant can say, well, I found out about this prior flooding after I signed my lease. I want out. And they'll get out. So that's all I've got. We made it through in an hour and a half, and I'm going to take whatever Q&A might come up, but if anyone wants to share anything that is a co-presenter with me, I'm going to stop the share. You guys go ahead, share what you want. I know Jeff always has something to share with us. But other than that, I'll shut up for a couple minutes.
If I may, thank you, Alan. Well done. Just real quick, everybody, as we mentioned at the beginning, the Q&A part, while we want you to hang out, this is bonus. This is not required. After you fill out the evaluation using the link that is in the chat module, and I'll put it in there again in a moment for those of you who haven't yet clicked the chat module, you can go. So just fill out the evaluation, and then if you don't need to hang around for the Q&A, you can go. I do apologize. We ran over time a little bit. That is my fault, my doing. I did not incorporate enough time for the extended housekeeping at the beginning and did not anticipate the technical issues we had at the beginning with the internet connection. So it's all on me, and I'll fix it for the next time, everybody. So I'm going to put the link into the chat once again, and then the three of you can get to some of the Q&A.
All right. Anything you guys want to add before I get started on blitzing through as much as we can? All right, let's do it. Martin asked, do the CAM rules apply to HOA CAMs as well? Yes, all CAMs. That was an easy one. Corinne says, hi, Alan. Hi, Corinne. Corinne asks, are presidents trying to complete another CEUs even though it was completed in 2024? Law says every 10 years. Can he spend almost 20,000 of shareholder money when there was nothing found in the original CEUs that was urgent? Well, it depends whether there's any reason to believe that anything that's in that original CEUs is now inaccurate. If there's nothing that leads anyone to believe that it wasn't 100% accurate, okay, I can see that that might be wasteful. But if there's any reason to believe that it's wrong, maybe you'll end up paying $20,000 less in assessments going forward because this new report was obtained. So I can't say that it's necessarily wrong without more facts. Angelo asked, can the one meeting requirement by management, this is the one where management needs to attend, be the annual meeting? Yes. Corinne asked, board president making decisions for the entire board. I can't find the statute saying it's a violation, but I know it's against the law. Not the topic for today, which is a legal update. But yes, there's nothing that says that an individual director gets to make decisions. Those should be made by the board unless that person's been delegated the authority to make those decisions. The way to handle that is usually to have a board meeting with the officers on the agenda and change who the president or VP is so that they no longer have any reason to believe they have that power. Susan asks, is it a conflict of interest for the property manager to be hired under a separate contract with his project management firm to be the project manager for a concrete restoration project? Not if it's disclosed in the management agreement. If it's not disclosed that that service might be provided, then yes, it's a conflict. But again, that doesn't make it bad, just needs to be disclosed. William asks, does multiple bids mean two, more than two? Multiple means two. Some people will say, oh, I have to get 3 bids. No, you don't. You never have to have 3 bids. You have to have multiple. Multiple is more than one. So that's the answer. Melinda asks, is it permissible for the CAM, which in our case is part-time portfolio, to also be the project management position paying over 500 grand plus bonuses for a proposed $8 million research project? As the property manager, he's making 5% of any contract. Same thing that I said with almost identical question asked about 2 minutes ago. Depends on the contract. Disclosure is required. Doesn't mean you can't go forward with it anyway. If the bottom floor is for parking only, Gerald, I presume this pertains to whether you need a milestone inspection or a CEUs. The answer is no, that is not a habitable story. We don't count, no offense to anyone, but we don't count the homeless folks living in cars as a habitable story. What if your management company provides links to recordings that consistently don't work? What recourse does the director or board have? You can report back to management that they need to do a better job of providing functional links. Provide them the link and ask whether it works for them and whether they would be happy with it if they were signing the contract and paying. Thank you, Leslie. Jackie, good to hear from you. If a condo board doesn't video board meetings, but an owner wants to video, can that Zoom link be supplied to owners? Generally speaking, it can be supplied to the owners, but it is not an official record of the association. It's not an obligation of the association to maintain a copy of that recording. And it's just the member is on their own to take the risk that they're sharing it with the wrong person and might be pursued by the association. But sharing a video of a meeting with only the members, not the tenants, not the people that live there or visit there, but the members, is okay under Florida law. Peter, on Zoom, we're concerned in today's litigious society that recordings will be used for that purpose. Yeah, no crap, Peter. Totally agreed. And that's frankly the reason that I made the suggestion of working around that requirement if you can. Corinne asked, must have adequate for full replacement cost applies to 719. Yes, a co-op also will need to have the full replacement cost covered. All the CERS requirements for condos, I'd say 99% or all apply to co-ops as well. Corinne asks as well, we special assessed for a $500,000 dock. They only insured for liability. I said it must be for replacement. Then they only covered it for 350,000. Is that allowed? This is the insurance requirement. Frankly, read the slides. That answers the question. I can't answer, what replacement versus in full value, what you need to have. You need to have someone do an investigation of what is actually required. If it's only 350 to replace that dock, just because you spent 500,000 doesn't mean that that's the replacement value. So I can't give you a concrete answer, unfortunately, on that one. John asks, if an online meeting doesn't provide a physical presence, is the meeting still valid? Well, it's a basis for an owner to challenge the meeting, but frankly, I don't think it would be really valuable to make that challenge because the board could either have a unanimous resolution adopting whatever votes they took during that meeting, or they could just take the vote at a subsequent meeting that has the same purpose. So, yeah, I mean, you could make that argument that it makes it invalid, John, but I don't think that it's worth it, frankly. Mackie asks, slide says insurance may not must be for replacement costs. Can we insure for less? Again, it is may not must. Take that how you want. And I'm sorry that I'm giving these incomplete insurance answers, but I'm not an insurance agent, so I would talk to that insurance agent if you want a more concrete solution here.
Yeah, Alan, one of the things that we do in ACAM, we have, and again, because it's a lot of insurance questions, we have a director of mitigation insurance, and they actually see the policies, read it. That's her support for all our team members, even for board members. So he goes into the logistics of things and just like really reads your policies because it has to do a lot with, the loss runs and how it's worded and what is applied and what's not. So if you have any questions specifically on insurance, feel free to email Eric or I, and we could be an added resource because a lot of questions are being asked about Alan about insurance. I just wanted to point that out.
Yeah, I appreciate that. And I don't pretend to be an expert in what insurance coverage is required for a specific condo or a specific asset of a condo. So that's
Correct.
definitely a valuable resource because frankly, your attorney shouldn't be giving you guidance on that specific issue.
Yep.
Um, okay. What's the Q&A sheet Mike asked that's required with the official records that are available to just pick up from the office? That is something that you can look for on the DBPR website. They got a form that you just fill out, and it's basically some basic information about the association, how it operates, and things like that. Some of it is just generic. Here's how a condo operates. So my best suggestion is just look on DBPR's website for that form and move on with your life. Denise asked, do the attorney findings on a foreclosure, once that has been settled, need to be published on the website? Yes, that does go on the website. Actually, let me correct that. That is an official record, but it doesn't need to go on the website because it's just not one of the records that the statute lists as being held there. Now, if you're putting all your official records on the website, the answer would be yes. And that makes it easier to respond to official records inspection requests because your response at that point is look at your portal and move on with your day. Linda asks, we post the required docs on our website, also available at the management offices. Do we still need copies of the clubhouse? Unfortunately, yes, because that's what the statute basically says. Raymond asks, can the board meet on video conference just to brainstorm, nothing specific? Still required to have it recorded, blah, blah, blah. Short answer is you cannot have the board members meeting to discuss association business without having it be a meeting that is noticed and held in a proper format. That would be what people refer to as an illegal board meeting. Now, if it's a closed meeting, that doesn't mean that you can't tell the members you're not allowed to attend and not provide them the Zoom link, but you still need to post the notice and have it be held as a proper meeting. You can email back and forth because you're not allowed to vote via email. You can communicate, but you can't vote and decide anything and not give the members notice. That's the shortest answer I can give without being completely incomplete. Rosalind asks, is it appropriate for the board to request a list of all unit owners' contact information and use it for election solicitation purposes? Generally not ideal, but nothing says that you're not allowed. Peter asks, Zoom is an issue for our board as we're targeted for buyout with 100% participation to terminate. I'm not sure what the question is, so sorry. Richard asks, assuming you're doing Zoom meetings, have everything on the website. Do you still need a hard copy on site? Already answered that one. Yes. Peter, the video conference option Alan spoke of, is that subject to recording, providing it to owners and maintaining for 1 year? Answer is no. That's why I gave the option. Lori asks, my association, 90 units, doesn't have a website or portal. It will take a short time to address this non-compliant practice. The new board stepped on May 12th. Will we face fines? Technically, no, I'm not aware of any community that's gotten in trouble for not having a website, but all it takes is one owner to complain to DBPR for you to get hit with fines. So, my suggestion, if you're not with a management firm, find one because you'll probably spend about the same on getting a management firm to do most of the work for you as you would trying to create a website through some other company. And it's probably worth it to pursue that. I mean, if you
Mm-hmm.
want to create the website on your own, keep in mind it has to have login credentials. It has to have information kept behind those login credentials. Not a lot of people are able to do that independently and without hiring a company to put that website together. And
And you
then
have
you
to
have 30
maintain
days to
it.
upload all that.
Yep. Yep.
It just for to me within the industry, it makes more sense to hire a management company than hire some website vendor. Sorry, Maureen, I didn't mean to cut you off, but
No, no, it's Alan, you're on point. I mean, it's just make it practical. Budget season is here. You have to go ahead and invest. It again, by the dollar, it's not, it's not significant, but again, you're avoiding some the DBPR to get involved. You're avoiding an owner to, a legal suit for just putting your document, your contracts,
yeah,
everything that's required. So yes, it's work easier.
yeah. Well, I mean, make life easier. You're a
Make life
volunteer.
easier. Yeah.
You're a volunteer, and the money is coming from partially you, partially everyone else in the community. Why make your life harder? I just don't get the concept. Anyway, Mackie, can a majority of membership vote for a lesser financial report every year? Answer to the first part is yes, every year. I believe it's only up to 2 consecutive fiscal years, is what the statute says, but I might be mistaking HOA and condo. Isabel, can the association charge an owner to email them financial documents, blah, 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 if they ask for this often and takes time for the manager to delete the account numbers, etc.? Short answer is yes. Longer answer is only if the management contract calls for it and only up to $20 an hour for every hour incurred beyond the first half hour spent working on this. My recommendation is that every association have a records inspection policy that also clears this up rather than just having to hand out a copy of the management contract every time someone's trying to do a records inspection so that everyone knows what they're subjected to. Your attorney knows what you're subjected to because when I have a community ask me, is this a valid records inspection request? My first question is, does this community have an inspection policy that we've got on record? That's the first thing I'm looking at. Did this get submitted in the way that the association requires? If you're requiring something that's not written into a policy, you're probably setting yourself up for failure and for a $500 gift, which is
Yeah.
what you end up paying for not providing that records inspection. And by the way, now you've got criminal penalties for not providing that inspection as well.
And also, what's important too depends on what they're asking because a lot of times they ask for invoices from attorneys. So there's confidential information in there. So
Right.
again, like you have to work. We're done with the days that the attorney, like, don't ask the attorney. It's gonna cost us it's gonna cost. No, 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 no. You need to work with the attorney because there are invoices that you cannot re-release. Even if you're the owner, you should know the number, but there's information in there that needs to be redacted. So again, with records requests, definitely work alongside your management team and your attorney.
Yeah, I totally agree. I mean, the reality is, our firm tries to keep any confidential information out of our billing, but it'll slip in once in a while. And so 99% of the time when people ask to see our bills, there's nothing that needs to be redacted. But if you've worked with a different law firm or there's a new attorney and their billing for some reason wasn't reviewed very, very carefully, yeah, I mean, I totally agree. You never know what needs to be redacted. All the bank account numbers, all the owner's personal information. There's a whole statutory list of things that you don't give over to the other side that's asking for the inspection. So, it really is something that you might need attorney involvement, but if you've got a procedure in place that your attorney wrote up, presuming they're competent, you really should be able to take care of most of this just by looking at that policy.
There are some out there that are not competent.
None of them that work with us. That's the way I'll put it. Bethany asks, can the board decide to take an emergency line of credit ahead of storm season without a member vote? My answer is double no. You can do that, but it would require that you not be doing it for any of your structural integrity reserves, which requires a member vote regardless of what your declaration says according to the statute. It would, if you're doing it for those structural integrity reserves, you really need to get it done when you have the need, not in advance. And if you're doing it for something other than structural integrity reserves and your governing documents say you need a member vote, then there's no emergency. There's a storm coming is not an emergency that justifies ignoring your governing documents. There's a storm here and it caused damage is a basis to potentially ignore the governing documents. The only other thing I'll mention is that there are statutes governing things that you can do in the event of a declared state of emergency that you can't do any other time. So that's the statute that I would say you want to look at. Let's see. Yep.
Let's do a couple more because we're way beyond the time now, and I
All
know
right. Well,
folks
then
are.
we'll take the next three that I can physically see. Um, Dominic, please explain 21 days after financials completed and 180 days after the end of the fiscal year. So the financial report needs to be sent out 21 days after the end of the fiscal year if the association's putting it together. That goes out to the members or a notice saying the financials are available. The alternative is if you're sending that out to a CPA or some outside accountant to get the reports created, you now have 180 days to get the report from the person creating it and send it out to the members. So the 21 versus 180, it depends whether you're creating it yourself or your manager's creating it, or alternatively, you're sending it out for someone else to do it. Isabel, is the milestone inspection only for condos of 3 floors or higher, 3 habitable stories or higher, does not apply to apartment complexes at all? And Corinne, last one, is this 25K only related to structural items? No, that is for all items that are of deferred maintenance caliber. All right. Well, I apologize that we went way over, but I was trying to get to as many of these questions as I can. If I didn't get to you, feel free to email me and I might respond. I might not be able to, but my email address is on your screen. It's as@kbrlegal.com. I hope you guys enjoyed this. If not, my name is Jeff Solomon, and thank you for your time. Hey Cam, thanks for joining us today. It was great having you guys here. I moved up from South Florida years ago, but I definitely enjoyed working with you guys back in the day when I was still down there, and hope to have that
He's still with
opportunity to come
us.
up here. Yeah. All right. Well, thank you guys. I'll leave it up to the three of you now, and thank you
Thank
to
you.
everyone for attending.
Thanks, Alan. Fantastic.
Thank you, Alan. You have a great day. And ooh, I got something in my eye here. So if any parting words from you guys over at ACAM, because I'm going to remain on for everybody who might be struggling with the evaluation and just share my screen to go over any common errors that people might be encountering.
Jeff, I'm good. I just, again, very grateful. Love doing the webinars with you. For us, it's super important to bring the educational part of it. I know Eric has some great messages that we have upcoming, so I'll leave the team, but thank you very much, Alan. Fantastic job. Thank you.
Thank you guys very
Thanks,
much.
Eric.
I do have a 12 o'clock prep for tomorrow's webinar, so I'm going to step off. But thank you guys very much
Me
for
too.
joining us today.
Thank you, Alan.
Thank you.
And for everyone that joined us today, we had a lot of questions. Alan covered a lot of content near the end regarding CEUs and regarding reserves. So as part of ACAM's commitment for giving you guys as much education as we possibly can put out there, I have 2 upcoming webinars. I have one on the 21st that talks about reserve funding, pooled funding, component method funding, really goes in depth on the reserve features. And then we have a follow-up webinar on the 27th where we talk about, what are the requirements and necessities in your CEUs reports and in your reserve reports. So I know we had some questions in that. We covered it as far as what the statutes now cover. So if anyone would like, ACAM, we usually send out the same announcements to everyone, but if you're interested, please email Maureen and I, and we can get you the link for the reserve courses. Again, just trying to push out as much education because we do not expect you guys to be experts. There's a lot of stuff that flies at you as board members on a daily basis. So if we can assist in any of the questions, please reach out to me, Jeff, Alan, Maureen. We're always here to assist in any way we can.
Well said, Eric. Thank you. And nice to know we have a shared history too. So I learned something new today.
Yes, sir. Always fun working with you, Jeff. He's a great host. I know we had some technical stuff, but if there's anybody that can solve them for you, Jeff's your guy.
Well, thank you very much. And Eric, great to see you. And I'll chat with you soon, man.